One thing that I have been reading over the last couple of days when it comes to the comments on the YouTube channel is simply, why hasn't the market pumped drastically since we got the Fed rate cut decision? Now, I said over the last couple of days leading into Wednesday that we would ultimately have a sell-off after we got the news. It would be a sell the news event initially, shake out the market, and then things would bounce back. I also mentioned that the market was pricing in a 25 BPS cut anyways, so if we didn't get anything crazier than that, or if the Fed paused rates, then that would affect the market drastically. However, what does the rate cut do for this market? Well, rate cuts are always good. They're always good for liquidity. They are good for easier money because when someone goes out to borrow money, it is now 0.25% cheaper to borrow that money. This is why rate cuts are so important to focus on. It is lowering interest rates. It is allowing easier money to hit these markets. It's increasing liquidity. It will also lead to the M2 supply increasing, aka global liquidity. Now, if we are looking at the market today, is it doing bad? No. We're at 4.03 trillion. Looking at this on the 1 year, we are still cooking. There is nothing to be concerned about these recent moves. Now, yes, on a few of these charts like XRP, we're down below $3. Is it something that I'm worried about? No. We'll talk about that here shortly here in a second as well. But also looking at the fear and greed index, we're now back to 48. We're still cooking in that neutral territory because people just don't know how to gauge this market right now. They don't know how to be, bullish or bearish at this point because there's nothing telling them to be bullish or bearish. This is why I said, we need to focus on the facts. Number one, we just got the first rate cut of 2025. Let's compare it back to September, right, of 2024. That's when we first got our official rate cut. Now, in 2024, the main thing that I was looking at during that time is just how the market was gauging the sentiment. Back in September of 2024, we were down at, almost extreme fear levels. We were down at 26, 25 or so for fear and greed. Now, after that was our bottom, we went insane all the way into the end of the year. Yes, we were already starting to sell off in terms of fear and greed, back down into this neutral territory. However, the September lows marked the bottom on the fear and greed index. We already bottomed out in terms of the market back in August. September was a higher low. Now today, it's a little bit of a different story. And we'll talk about that. But also, altcoin season, 76 out of 100 still, because if we're looking at top gainers and top losers, we're still starting to see a lot of gains across the board. However, a lot of this is just outliers. And by the way, a few of these big gainers, like for an example, Aster, right? Aster just recently launched. Like these are recent launches that are supporting the whole idea of, Altseason's here, right? No, these are fresh launches. They're easier to move because they're so fresh. They have a lot of capital in them. A hype is building around them. So we're just seeing liquidity flowing from one thing into another thing just to kind of, support these pumps. We watched this with a lot of altcoins over the last 30 days. I mean, if we're looking at the last 30 days, top 500 gainers, for an example, just going down this list, for an example, Avantis, right? Avantis is another fresh launch that pumped crazy from 20 some cents all the way to $1.60. This is, it's not like these are bad projects or anything like that. I'm just saying that these fresh launches are going to move the altcoin season index drastically because they're gaining a ton of market cap. They're starting to usurp dominance, but for the most part, we're not really seeing altcoins bouncing in a big way. We're not seeing altcoin gains, drastically outperforming Bitcoin or Ethereum. No, we have yet to see that. So a lot of people are getting a little bit confused. They're like, all right, well, are we in alt season? Because the chart is telling us that we are. This chart is, hitting a higher level than going all the way back to like 2024. I know that this is only going off of like the 90-day time frame, but like looking at this compared to like 2024, we're at those same levels that we saw during like the craze of November into December of 2024, but we have yet to see altcoin gains similar to that. Now again, let's go back to 2024. First official rate cut, September 18th. Looking at the view here we have September 18th on the total. Okay, the total from that time on pumped about 14.5%. Then it dropped about 12%. But as you guys can see, we were already bottomed, right? We bottomed going all the way back to August. This is what I meant by August was our bottom for the market. September was a higher low. Then we got the rate cut. Even on this recent drop was a higher low. Technically a higher low. It was a shallow higher low, but during this time we were also creating higher highs. This supported that big move into November that led to the December and January craze for altcoins. Now, today, is this any different? Do we see anything to align with that same pattern? Well, just looking at the total, and I know that this is going to look a little bit rough. Let me remove everything just so that we don't get confused because I was looking at it on the weekly. But just looking real quick at the total, we have our official rate cut, and I'll just kind of throw an arrow on the board just so that you guys know exactly when our rate cut was. Here we have the 17th. This was our first rate cut of 2025. All right, we had a slight push. We hit about roughly 4.08 trillion. Not a bad push. Looking at this on the 3-day structure, we're still at a lower high here. We still need to push significantly higher. But looking at this, did we bottom out already? Yeah, we bottomed back in April. We had a higher low going off of the June low. We had a higher low going off of the August low. We have a higher low going off of the September low. Now, if we do sell off from here, which, there's definitely a possibility, I still wouldn't be too concerned unless we lost these lows down here. And that's still a very significant drop from where we are at. This is a $3.65 trillion level. We're at $3.97 trillion. Listen, we could still have a potential sell-off back down to like 3.92 trillion, maybe even a little bit deeper, retest some of these highs, 3.85 trillion. I still wouldn't be concerned. The biggest thing that everyone's wondering about is why aren't we pumping to the upside here? Well, we're still just consolidating. We're still just, chopping here. But structure is still pretty bullish. We recently just broke over the highs going back to the end of August. Yes, we still need to clear these highs from August, but this is still a very good start. We still have higher lows. We're still starting to see some higher highs on the lower time frame structure. Higher time frame structure, we're still kind of, just waiting for a big push to the upside. But the good news is that, money is starting to become easier to obtain, aka rate cuts. This will support the market pushing higher. Stocks have already been pushing higher. Gold has been pushing higher. Everything has been looking pretty good. We just have yet to see those higher highs. The same goes for the altcoin market, right? Going all the way back to that official first cut of September. Here we have that first cut. We pumped by like 16.89%, almost 17%, but then we dropped. Now, we dropped about roughly, almost 13%, and we just continued to kind of chop here around those highs until we broke out. Again, the same sort of situation is happening right now where, most of this market is just kind of still chopping around previous highs. We're still fighting some resistance. We're fighting against it. We're waiting for that big breakout moment. And we could chop for a little bit of time. The rate cut doesn't immediately affect the market in a big way. In fact, it's more so of a lagging indicator. But looking at the total 3 today, and by the way, I do have this line on the chart here. This is on the weekly, just so that you guys don't get a little bit confused. But here we have the first rate cut. We still pushed a little bit higher. We did find resistance right around roughly, 1.15 trillion. This is around some of these wicks going all the way back to December. But altcoins, by the way, made a new all-time high in terms of the entire altcoin market, made a new all-time high on the day after the FOMC meeting. So again, it's not like the market didn't have a little bit of a push to the upside, But this is just the beginning, right? I'm not saying, oh, hey, look we already made all-time highs. Like that was it. No, I'm just saying that we did have an impact in the market from the Fed rate cut decision, but not the way that everyone wants to see just yet. But I do want to go over what Tom Lee has been telling us. So there's a few videos here from Tom Lee. I have two videos. This first one was recorded on the 18th, so yesterday. We have Tom Lee. Every time the Fed cut near all-time highs, markets gained over the next 12 months 100% of the time. Listen closely to this video.
September. As you know, we talked about how consensus thought September would be a down month, but we had the non-consensus view that September would be up. And then we had the August jobs report and August CPI, and both were positive for markets because they were ultimately interpreted as dovish. And yesterday we had the FOMC rate decision, and it was a dovish cut. The Fed cut 25 basis points, but he had a dovish explanation and really talked about how the risks have shifted towards the job market. Now, this is what we expected. As you know, we sent out an alert on Wednesday before the FOMC rate decision, and our take was that stocks were hesitant into that decision. That's because I think investors were thinking stocks would be down, but our take was that we would ultimately rally post FOMC decision. And that's what's happened because on today, which is Thursday, not only was the S&P up, but it was led by the NASDAQ up 1% and small caps up 2.5%. And more importantly, I think there will continue to be follow through. This is shared from Carson Research, but they show that whenever the Fed cut near all-time highs, markets had 12-month gains 100% of the time. So I think it's a bullish cut. And again, we're in an easing cycle.
And yeah, I mean, listen, this is extremely bullish for the markets. The biggest thing that I want everyone to understand is right now, sentiment sucks around crypto. It really does. I also want to say, going back to the September 2024 timeframe, you know, everyone, I mean, right now, everyone knows that September of 2024 into November, into the end of the year was very bullish. However, during this entire time, nobody was bullish. Nobody was bullish during this time. Nobody cared about the market. Nobody expected, the market to trade at, new all-time highs or anything like that towards the end of the year. Everyone was still extremely, bearish. The sentiment sucked. But then November happened. The same goes for now. Everyone right now is not expecting higher. They don't care about the market. They're, bored with price action. Altcoins are not trading at new all-time highs. So, everyone's frustrated. Sentiment sucks, but we just got our first official rate cut. Markets typically trade higher, 100% of the time over the next 12 months. So when it comes to stocks, which by the way, stocks still making new all-time highs, finished out the week at, 6,664, new all-time high, pushing higher. Markets are looking extremely good in terms of traditional markets. We're just waiting for crypto to catch up. And we also have over here that Tom Lee said on Power Lunch today that a Fed cut isn't just lower rates, it's a green light for companies to expand. He also said that he sees stronger growth in 2025 without inflation powered by AI and Wall Street building on blockchain. Check this out as well. And by the way, this is a recent clip. This is from the 18th.
So let's bring in Tom Lee, not the drummer. Tom, what do you make? I mean, how much does the Fed really matter to the equity markets right now?
The Fed still matters a lot because they are the most powerful institution in the world. And it matters because monetary policy relatively tight has kept the ISM below 50 for 31 months. And so corporate America has operated with a bit of caution, keeping the car in low gear because they didn't know where inflation was going to be, and they didn't know where monetary policy was. So I think when the Fed begins to ease, it's not just a move in interest rates, but it's a green light for corporations to get more confident. And as you know, the ISM moving above 50 does not only revive economic activity, it probably also rejuvenates the labor market, which has been sluggish for what looks like more than 12 months.
So does that mean if the Fed stays dovish or keeps cutting, that there's other newer legs to this pretty remarkable stock rally?
Yes, and I might even say that I think that we could have growth recover without inflationary pressures. I think reflexively, people the last few years think growth picking up means there's automatic inflation. That has not been the case for 25 years. But I think if companies begin to expand, plus the fact that we know AI is driving productivity gains, and that's really a big tailwind for businesses, and then we know that there's initiatives around Wall Street boosting productivity because they're going to build on the blockchain, I think there's a path for growth to be stronger next year without a pickup in inflation. That's going to be very good for profits and for equities.
Yeah, and listen,
and that is another big thing to focus on, right? The biggest thing about all of this is that, yes, rate cuts are not just good for markets to expand. It's good for companies. It's good for, again, just easier money. So when we think about what's happening right now, all right, if you're not bullish right now, you will be in a month from now, for an example. Again, it just goes back to 2024. 2024 is a very good example of what to expect. Everyone's saying, oh, the rate cut, decision, it completely failed, right? Because markets didn't immediately push to the upside. Guys, these decisions, just like back in 2024, yes, they're very significant for the markets, but they don't impact the market straight off the rip, right? It's a lagging factor. Right now, market structure is still extremely bullish. We shouldn't even be talking about bearish price action at all. We should be expecting significantly higher in the coming weeks. Because again, we're already seeing that with stocks. And talking about XRP, right? Like if we're looking at XRP, yes, we have our rate cut here. XRP is still selling off a bit. But looking at this let's just look at this on the weekly, right? We're still looking extremely good here on the weekly. We still need to push significantly higher. We need to break $3.20. Right now, we're trading under $3 or at least around $3. But looking at the structure on the daily, what are we looking at here? What should we be expecting? Well, even if XRP does continue to sell off, right? We have our official low down here. This is where we should bottom out. We should not see anything close to these levels down here. Looking at XRP, we should technically look for around, it's a little bit lower, right? We should be looking at around this $2.95 level holding. This would be my first guess of where we should start to see some sort of, support, some sort of impulsive move on XRP. But regardless of how things will look in, say for so, a couple of days, I still go all the way back here to September of 2024, because again, we have our first official rate cut back in September. And the markets did push higher, right? Towards the end of September, XRP did have a nice little jump here, created a higher high, by the way, on the weekly, going off of the previous highs, pushed higher than all of the highs back in March of 2024 as well. But we did find resistance around 64 cents. We sold off. And during this time, we created a lower low. We created a lower low going off of all of the previous support, going off of the lows here, even the lows around, the beginning of October. So when we created this low, everyone was like, all right, well, that's it. XRP sucks again. We don't care about XRP. And then right before, we started to see this big push to the upside, sentiment was already dead. Most of the market was pretty much given up on XRP. All of a sudden, and let's just zoom out again onto the daily, because I want to show you guys this on a little bit of a lower time frame structure. On the daily, what ended up happening here was we found support, we hit a double bottom, and then we start to break out. We start to clear all of the previous highs going back to October. Then we cleared the high from September. And the second that we cleared this high and we pushed all the way to like 75 cents, this was the highest point on XRP since going all the way back to March 2024. This just continued to skyrocket all the way through November, all the way into December. Then in December, we hit a little bit of, a consolidation. We hit the brakes a bit, but then boom, by the middle of January, we hit $3.40. Then all of a sudden, XRP sold off and everyone was kind of giving up on it again. Boom, we have another big push here. The reason why I'm bringing all of this up is because look at the setup that we're currently in. Yes, it's a little bit of a, lower time frame structure compared to what we had back here from January all the way into, July. However, the same setup is forming here, where if we are going to have a sell-off on XRP, our low from the beginning of September should act as this low going all the way back to April. And if we sell off into October, say for so we have something like this, we should have a higher low very similar to this low back in June. From that point on, we should start to form a much larger push to the upside, and we should have a stronger impulse than any other impulsive move so far since going back to these highs in July. We should essentially repeat what we saw back here, where we do create a new all-time high on the chart. We should push to $4 plus, and that should lead to our eventual cycle top. But the chart setup here for XRP is still extremely bullish. The entire market is still extremely bullish. I'm still extremely bullish on altcoins as well. The rate cut does not have an immediate reaction in the markets. More so, it's a reaction across the board and what it does for these markets and for companies as well. Tom Lee is 100% correct here. I do think that a lot of people are overlooking this. All I have to say right now is either be bullish now or be bullish later. If you're bullish later, well, you're probably going to have some sideline cash. You're probably not going to be in stronger positions than most, and you're going to miss out on some of the largest moves. So the main thing to look at right now is stay focused on what's happening. Stocks trading at all-time highs. We just saw the first official rate cut of 2025. We'll probably get another one in October, right? We'll also probably get another one in December. The markets are going to look very good leading into the end of this year. During that time, we'll come back, revisit the idea of, are we looking toppish or not? But beyond that, I do think that a lot of people are missing the big picture here when it comes to rate cuts and the impact that it has on the market. Not immediately, but give it like a week, maybe even 2 weeks, we should start to see bullish structure on almost every single chart forming. So with that being said, I hope that you guys enjoyed this video. If you guys did, definitely leave a like, subscribe, turn notifications on because more free content. You guys are more than welcome to follow me on Twitter and join the free Discord on the description below. And with that being said, guys, it's been Nick. Thanks for watching. Peace out.